Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond over at the Contrarian Trader, and we have a lot to get to, some really awesome charts, so please stick around, watch the whole video. And if you're here for just one specific symbol, if you watch this on YouTube, look down in the video description area, and you'll see the symbols listed in order of how I'll review them. Same deal goes for the website. If you're watching it there, you'll find the symbols listed in sequential order of how I'll review them. All right, so how was our week last week? Our week was really good. We closed out two trades. One was our second short of NKTR. I'll go to that chart in a moment. The other was our short of the Russell 2000 using the TZA. And I'm going to share with you my rationale for closing out that short position of the Russell 2000 in a moment, but I want to first emphasize how much I put importance on doing your analysis after market hours. Why? It's because if you're doing your analysis of a swing trade during market hours, you're not getting the full picture. This is why I always tell members, it doesn't matter where a stock trades intraday. What matters is where it closes. It could be up on the day, and if you're doing your analysis at noon and you're saying, wow, this stock looks like a buy because we're rallying so hard on the day, and then by 4 p.m. Eastern Standard Time, it's given back a portion of all of its gains, well, then your analysis was for naught. You didn't have the big picture. You were working with an intraday picture of how the stock was trading and not where it closed, because that's what matters. Institutions, the professional money, they put on their trades in the first hour and in the last hour. Anytime in between those 2 hours, it's all computerized trading, as well as what they like to call, meaning Wall Streeters, dumb money trading. So don't get lured into that type of trading. Even the best day traders will tell you, you trade the first hour and that's it. You move on. So here is my analysis before the market opened on December the 7th about the Russell 2000, of which we were short and looking to book profits on. IWM, we're going to look to book some profits here. I think that we're going to get a rally soon. Volume, very light yesterday. Looks like MACD is going to go negative. So we'll probably book profits probably today, and then wait for a rally back, and then we'll look to reopen the short at higher highs with a stop right above 155.41. And we'll look to add if we get a breakdown below this week's lows, meaning if we put in a lower high, that's a double top. If we break down below recent lows, that's a confirmation breakdown. The path of least resistance will have then changed. Okay, that was from Morning Update with members of the Contrarian Trader pre-market on December the 7th. And here's how it played out. We did not put in a new daily low. This is the 7th right here. We did not put in a new daily low. We held the prior day's lows, and then it was off to the races. Now, what I was talking about with members about how we would look to re-enter the short side was that we would look for a rally, which we got, and for us to put in a lower high. Let's put some lines up here, and I'll illustrate what I mean. Okay, so we know where there is historical resistance. Right here, the market sent us a signal back on December the 4th that you had sellers above. They were looking to book profits because we were at all-time highs. There was no overhead supply here, meaning prior buyers just looking to get made whole. These were profit takers. They were looking to close out their year. It was a rock-solid year. These are institutions. They have to send out their annual statements to their shareholders, so they had to make those gains real. And this is probably what you're going to see into the new year. Now, am I anticipating getting short of the Russell 2000 prior to the new year? Probably not. Why? It's because seasonality does not favor the short side from this point forward. What I expect is lethargic trade, and I'll be looking for a lower high versus the highs seen on December the 4th. I'll be looking for a breakdown on the IWM into the new year. And if we get that breakdown, we'll look to reshort using the TZA. Now, is it a guarantee that we're going to get short in the new year? No, not at all. We've had some good economic data. You have some fiscal stimulus coming down the pike for corporate taxpayers and for even some individuals in states that are not high tax, like New York, California, and pretty much the entire Northeast with the exception of New Hampshire. But the market as a whole is extended. We are ripe for a correction. We do have a Fed meeting next week, and that will certainly influence the direction of the markets in the near to intermediate term. So that's the IWM. Now let's take a look at NKTR. We shorted this not once but twice. So in our most recent trade, we reshorted back up here after it had rallied, broken out. The market sent us a signal that there was topping action up here vis-a-vis the topping tail on top of this candlestick on the 29th of November. Then there's doji star formation, which is a sign of indecision, on November the 30th. And then we decided, okay, it's time to reopen our short. And sure enough, the shares began to break down, and we got out here on December the 5th. Now, why did I decide to book profits? Well, we have a stock that is in a strong uptrend, and you have to revert back to why you entered the trade. We entered the trade because the shares were extremely overbought on RSI, the relative strength indicator, and at unsustainable levels. Normally, if you're reading technical analysis for dummies, they'll tell you that RSI above 70 is overbought. I don't use that rule. I think you can go broke using that rule. I think that you buy stocks many times if RSI goes above 70 because they're probably going to go parabolic. I look for overbought indicators at 85 to 90 on the relative strength indicator, or RSI. So we had RSI above 90. We knew it to be unsustainable. We also had on a weekly chart the shares leaning into their third standard deviation Bollinger Band where they're not supposed to be relative to their 20-period moving average and well above their 2 standard deviation Bollinger Band. So the shares were overbought and ripe for a pullback. But that pullback would be, back to the daily chart, only the froth coming off of a stock that is in a bull run. So you can't expect it to go crashing. All we were looking to do was scalp a profit off of NKTR because we respected the strength of the stock. We also knew that there was a very high short interest in the shares and that a retest of a support level would probably have buyers moving in to squeeze the weak shorts, which is exactly what happened. Had we been greedy and not looked to book profits, a reasonable profit, at a support level and not respected the health of the stock and not been aware of the fact that you had a lot of shorts waiting to get squeezed, we would have lost all of our profits in this short squeeze right here on the 7th of December. So that was our trade of NKTR. And congratulations to those members who joined in. All right, now let's segue into best stock charts for the coming week. And folks, if you'd like me to follow up with you on Wednesday, which is where I do best stock charts follow-up, to, again, revisit those symbols that we reviewed on best stock charts the prior weekend, just leave a comment on the website or on StockTwits Twitter, whatever you're watching this on. If you watch this on YouTube, do me a favor, give me a like and a subscribe, and just leave a comment down in the comments section, and I will certainly follow up on Wednesday with those charts that I'm reviewing today and that you have an interest in. So they'll take priority. All right, let's get to it. Now, we have a lot of symbols to go over, so I'm just going to go over the weekly charts, and then I'm going to narrow down the best stock charts that I like the most into a short list. And I don't mean sell short. I mean just our short list, our shorter list of names that I like going into the week, because the daily and weekly charts are really looking good. And I'll review those in greater detail. We'll do a deep dive with members on the week ahead commentary coming out tomorrow, meaning Sunday, for members of the Contrarian Trader. Now, our gold levels and silver levels are closed, but our bronze level is open. So if you want the week ahead commentary, just go to the website, sign up for the bronze level, and you will get the week ahead commentary, and you'll get my deep dive into our favorite stocks that I'm going to review right now. All right, let's do it. Let's get to XLV. This is the Healthcare Select Spiders. We have RSI, which is diverging. That's a concern, but we've been in the consolidation, so we don't want to allow an RSI that is not breaking down yet. We're not making lower lows yet to dictate whether or not we want to buy a stock. We had broken out several weeks ago on the HLV here, the week of November the 27th. We are now retesting the breakout point. We haven't quite done it yet, but close. So the XLV is looking good. Now, what I don't like here, our Stoch RSI, they've been making lower highs. We want to see this pattern, this trend break. I want to see higher highs. So I like the XLV. I'm not ready to pull the trigger here yet, but perhaps soon. The TZA, I've spoken about this one earlier in the video. We booked profits last week. I don't think that we're going to be long of the TZA again until after the new year. If the markets look weak in the final days of the year, meaning it's lethargic trade, it appears as though we're putting in lower highs, I will entertain putting on a new short position. But I am going to respect seasonality here and not hope when I should be fearing, meaning I don't want to hope that the stock market corrects into a seasonally strong period of time. I want to fear. So rather than doing either, I'm just going to sit on my hands and wait for a better opportunity to come to open up our short position. Now, doing an analysis of TZA longer term using a weekly chart, you can see that we're putting in higher lows on RSI, no higher highs yet, no breakout yet, but it's looking more attractive. Stokes is still lethargic. Good price action last week, but we didn't close at the highs of the week and we don't have a breakout. I'd rather buy the TZA back on a breakout and ideally a retest of the breakout point. So more to come on this. Good volume last week. Double bottom setup and a higher low on Ultimate Oscillator. Very strong Ultimate Oscillator. Next chart up, EIDO. The iShares Indonesia. I've spoken about this one a couple of times, not last week, but the 2 weeks prior. I spoke about EIDO and that we had broken out on a weekly basis, but then we failed. And on my last video, which was Best Stock Charts Follow-Up, it's posted on YouTube and on the website. I discussed how when you get a breakout point failure, in all probability, meaning we broke out here, and we failed to hold the breakout. That's a breakout point failure. We close back down into this trading range, or as some like to call it, a bull trap. And when you get a bull trap, in all probability, you're going to retest the lower band of support, and there's a good chance you break it. Now, in this situation here, we did, in fact, retest the lower band of support, but we reversed, and we closed back above the upper band of resistance. That's some bullish stuff. So I like the setup here. So EIDO is back on our long watch list. Facebook, a very similar setup here to EIDO, which I just went over, in that we had broken out the week of October the 22nd. It took a long time to get any follow-through, and when we got the follow-through, it failed, and we had a breakout point failure the week of November the 27th, and that is a very bearish setup. But I said I wasn't willing to short Facebook until we got a continuation breakdown below the weekly lows of November the 27th. And we had to close there. Now the following week, which was last week, we did get a continuation breakdown, but we reversed off the lows of the week to recapture prior support. A very bullish setup. So while I was bearish here and earlier here last week, I am now bullish. And many times, especially with Facebook and the FANG stocks, when I get bearish, I get some nasty tweets, twits, and comments. You know, you can't get emotional about stocks. You look at the charts show you the probability of where a stock is going to go, and you trade in that direction. Facebook doesn't send me a check every month to be loyally long and speak bullishly about the charts. My opinion about whether or not I'm bullish or bearish on shares of Facebook are purely based on the probabilities of the chart. And right now, on this day, Saturday, December the 9th, 2017, I'm more bullish than bearish. But would I buy Facebook right now? No. I like the setup here on a weekly basis. I need to see a breakout. So more to come on Facebook shares. More bullish than bearish, though. Okay, Google. We've been talking about Google quite a bit lately. And it's a very similar chart to Facebook in that we have seen selling into strength. It's attempted to break out but failed. Now, Facebook, it broke out, attempted to rally out of a retest of its breakout point but failed. And we had bearish key reversals on both Facebook and Google on a weekly basis. Now, when you're swing trading the stock market, you must respect the candlesticks or the price action. Whatever type of charting you're using, the price action is most critical along with volume. Forget the indicators. Price and volume matter most. And this chart pattern here, this candlestick pattern here, the week of November the 27th, was very bearish. And I said the last time I spoke about Google that if we got a breakdown, a continuation breakdown below the lows of the week of the 27th of November, the shares would be a short if they closed down below that level. But last week, while we did undercut the lows of the prior week, we flashed a bullish key reversal. That is really good stuff. So much like Facebook, where I was bearish last week, I have now become more bullish. Would I go buying Google in the next trading week? Maybe. What do I need to see? I have no position in Google right now. If it breaks down below last week's lows, I'm shorting it. If it breaks out, then I would consider buying it. We're opportunists. All we're looking at is the chart here. We have no dog in this fight. I don't care if it goes up or down. I would prefer it to go up because the path of least resistance at current is up, and it makes making money easier rather than fighting the market and shorting the shares. So I'm looking for a breakout here on a weekly chart. I like the shares of Google right now, but they were unable to break out last week and close above this upper band of resistance. And in fact, they were above this upper band of resistance, but sellers moved in and took it back down. Members, more to come on Google. I think this is going to be an interesting one for 2018 along with Facebook. LABU. All right, so this is another one where we have spoken a lot about LABU. I'm going to update this chart here. I'll be right back, folks. Note, I have no line here representing an upper band of resistance. I'm going to add one now. It's really critical to do this, especially for men, because we're more visual in nature. Women have memories like an elephant, and they can extrapolate out using their minds. Guys need a little bit more help. So I take my crayon out and I put a line up. And that is a compliment to the ladies. So ladies, if you're wondering, that's a compliment. Okay, so LABU, we first began speaking about it here, and we were looking for a retest of support, and we got that retest. Then the next time I spoke about it, we had broken out above the upper band of resistance, which was good stuff, but no breakout above this resistance line representing the series of lower highs. And what I wanted to see was a breakout above this upper band of resistance. And last week, not only did we get a breakout, we also got a retest of the prior low. That is good stuff. So I was bullish on LABU here the week of the 27th. I'm even more bullish now. So in all probability, we're going to be buying shares of LABU as a continuation breakout in the coming days. So members, we're definitely going to be talking about LABU on the weekend commentary. And again, silver and gold memberships are closed right now. You can get the weekend commentary using the bronze membership level. It will be coming out tomorrow. The next chart up, ConocoPhillips COP. we are looking at this one as a possible investment, not necessarily even a swing trade, an investment, meaning a number of months to a number of years. Why? It's because on this weekly chart, you could see, you know what, I'm going to update this. I'll show you exactly what I'm referencing. Okay, so you can see here, we have an inverted head and shoulders setup. In technical analysis, it's very critical to identify these types of chart patterns. And when you're using a weekly chart and you're able to identify these types of chart patterns, you're able to extrapolate out how far in the future you believe that the shares are going to move higher. If you're using an intraday chart like day traders do, I'm not a day trader, I'm not good at that stuff. Many people are, I am not. But when you're using intraday charts, daily charts, they're far too noisy, and your trade duration is far more limited, meaning you're probably only going to be looking out a few days in duration of each trade. Whereas when you combine the daily and weekly charts, or even monthly charts, which is even better when you see a great setup for a longer term trade, you're able to extrapolate out further how long you want to be in the trade and what price targets you expect to hit. And also you're able to identify, which is really the most important thing, where there is strong support, are you buying there, and do you put your stop loss right below that level? So in the case of ConocoPhillips, we have an inverted head and shoulders setup, left shoulder, head, right shoulder. Here's our 45-degree neckline. And we broke out the week of October the 16th. We rallied, pulled back, we retested it, and now we are poised for a breakout. I'm loving this chart. I think this is top notch. This is exactly what we're looking for to put on as trades. We do have overhead supply here, meaning these buyers who sat through this sell-off, they want their money back. So I don't believe that we're going to go straight shot to new all-time highs. There'll be some backing and filling, but I think net-net with the price of oil, which I'm going to go over in a few minutes using the USO, I think that this stock chart is looking rock solid. So this is setting up to be a really nice swing trade or an investment. So members, we'll definitely be talking about ConocoPhillips on the week ahead commentary. It's definitely on our watch list. The next chart up is ELGX. I've never heard of this company, but I can tell you, I know the catalyst of why or what will propel this stock higher, and I'm going to go over that with members on the week ahead commentary coming out on Sunday. So for now, we're going to talk about the weekly chart, and you can see that we are inching higher towards the upper band of resistance here at, let's call it, $6 per share. We're respecting the lower band of support. This is now established as being a nice support level from which you could initiate a position and then look to add more on a breakout above this upper band of resistance. You have your Stokes rising. You have your RSI rising. No breakout yet to higher highs on RSI, the relative strength indicator. But on your stochastics, you are beginning to see not only higher lows, but now higher highs. So the stock chart is looking really good. What's absent here is volume. We really need to see some volumes of institutional demand for the shares because you have a lot of overhead supply here, meaning buyers who bought back here, they're going to want their money back. They're not going to wait to look for a profit. All they want is that red entry on their trading platform to turn green, and they are going to sell. But again, we have a catalyst that I've identified as being a catalyst that will send LGX higher, and I'll discuss that with members on the week ahead commentary. Oil, USO. Now, oil has been down 2 consecutive weeks. You may be asking, Bob, why are you talking about oil? It's been down. Well, being down does not equal being out. What we're looking at here is a stock chart that is very, very bullish. And in the case of oil, it is also inflationary. Because despite all the solar talk and the electric cars, yada, 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 oil permeates every facet of our lives. And it will do so for the foreseeable future. Now, we broke out of this consolidation the week of November the 6th. We rallied. We even spoke about it. I said, wait for a pullback. We got the pullback. And what we've been doing the past 2 weeks is retesting the breakout point. So while the average investor may look at this chart and say, the shares are down, I don't want to buy this stock or ETF, or ETN, I should say, I'm looking at it and saying, wow, this is outstanding, because we're viewing this from a higher level view, not a daily chart, not an intraday chart. We're using the weekly charts to identify opportunity. And on a closing basis last week, you saw 2 consecutive weeks of retesting this lower band of support. So if I enter this trade on Monday, I know exactly where I'm putting my stop loss order, right below this lower band of support. Because if it fails and breaks back down into this trading range, that's a breakout point failure or a bull trap, and I don't want to be involved with the shares. However, if it holds and then breaks out, I will be buying more because my thesis will have then been validated. So more to come on USO, looking very strong. Okay, EGY. We spoke about this one on Best Stock Charts on November the 4th. I'll link to that video at the end of this Best Stock Charts video, so you can just go there, and if you want to watch what I had to say back then, that's fine. But what I'd like to do first is play for you what I told members on the week ahead commentary on November the 5th, the following day after I spoke about it on Best Stock Charts, because while I liked the chart, I cautioned that we would get a pullback. And sure enough, we did. Here's what I had to say to members. Another energy stock is EGY. A strong week last week. I spoke about it the week prior, and it was up 27% last week. It closed right at its 50-period moving average. We need to see a pullback, ideally down to 84 cents. Then we would be buyers on that pullback. But on a daily chart, we're very extended. This looks like a short squeeze. Here's the pivot point at 84 cents. Let's look for a retest of that support level. EIDO. Okay, so here's where I spoke about EGY. And what did it do? As predicted, it pulled back. And not only did it pull back, it flashed a breakout point failure or a bear trap and broke back down into this trading range. But what it did is it managed to hold on and retest this support level. I think the chart is setting up very nicely. And what we're looking for now, let's update the chart. I'm going to add on a resistance level here. I'll be right back. Okay. So I added this upper band of resistance. I'm looking for a breakout. And then we will look to put on a long position on EGY. Now, I will caution that RSI on a weekly basis has broken down below the lower band of support. So that's no reason to say I'm not going to trade the stock. It's just something to keep in mind that you're seeing a little bit of a breakdown on RSI. No reason to eject it from our watch list. Next chart up, DBEF, the Deutsche X Trackers. I have no idea what this is, but it looks good. It's a good chart. So we're retesting the lower band of support. We were overbought. That's been resolved. Now we're looking for a breakout on the weekly chart above this upper band of resistance. You have Stokes rising. Good stuff. RSI, not quite yet. They're stalled out. This could either be a double bottom setup on Stoke RSI, or if we fail, a double top and a lower high. So just a bit of a caution. Flag being on the track. However, price action looking really good here. I think that the path of least resistance continues onward and upward for DBEF. ABB, weekly chart. Last week, we flashed a bullish key reversal on the week, closing at the highs of the week and above a resistance level. This is a very interesting chart to me. Stokes are rising, RSI is rising, all validating the price action here with volume that is rising sequentially and above average for the past 2 weeks. What does that imply? Institutional demand. Very interesting stock. We'll talk more about this one. VDSI weekly chart. It's been in a long-term downtrend. I think that's coming to an end, though, as we broke out above the upper band of resistance last week. RSI, double bottom setup, retesting its breakout of a downtrend. It broke out the week of October the 23rd. It's pulled back, double bottom setup, off of this resistance level, now support, and now we are breaking out to higher highs. Stochastics are confirming the breakout on price as well. So this chart is setting up very nicely. Members will be talking more about VDSI tomorrow on the week ahead commentary. Next chart up, EWI. This is another iShares European ETF. We've been talking a lot about Europe the past several weeks, and you're seeing some breakouts in Spain, Italy, Germany as well. Italy is looking better than the German stock market at current. That could change. We have a bull flag formation forming. We broke out last week. So the Italian iShares are looking rock solid. Now we do have overhead supply back here from 2014. Those buyers who held through this downtrend, they're going to look to get made whole. So we'll talk more about EWI and our strategy for putting on a possible trade. ResMed weekly chart in a consolidation phase, looking for a breakout of this triangle formation. Volume last week was a bit light, but we're in a consolidation phase. So this chart is looking good as a possible long. The sector is in fuego. And that's it for this week, folks. If you're watching this on YouTube, please subscribe to my channel. Give me a like if you could, and leave a comment below if you want me to review any of these symbols again on Best Stock Charts follow-up coming out next Wednesday. If you're watching this on StockTwits Twitter, follow me there, leave a comment. And if you watch this on the website, please enter your email address. We'll send you out some free trade tutorials. We hate spam too. You will not be spammed. Everybody have a great remainder of your weekend and a profitable week. Next week, members, I'm going to get started now on the week ahead commentary. That'll be coming out to you on Sunday. Be well.